Welcome everyone to the Pro Trade Room Plus, a 30-year bond auction. My name is Lee Goldstein, the trading director at 10-Minute Trades. Please remember all the trades we discuss for educational purposes. I'm not a financial advisor. It is possible to lose money trading futures, so trade carefully. All right, so we're back in black for the 30-year bond auction. Hello everybody on YouTube. Thanks for joining us. We have one more stream tomorrow. We'll be streaming the WASD report at noon tomorrow. 11:30 we'll start. And I want to just give everyone a heads up. I'm going to put a link to being a member on our YouTube channel. If you like what you see, join up with us and become a member. What could be more fun? All right, 2 seconds. Let me know out there in the trade room if everyone can hear me. How's the sound? Sound good? Anybody? Somebody? Let me know you can hear me. All right. Thanks, Ray. All right. So let's take a look at the DMM, the Daily Trade Report. Give us an idea what's going on with the 30-year auction. We have two setups like we always do. We've got the main normal setup that we've been using for years, which is the ZB. And we've also got the YM setup. So we will take a look at our daily trade report. So what's been going on this report is that we had one good trade because of the tariff. The original tariff announcements created a huge spike in this report, over 20 ticks, which is considered very large. And we did have a winning trade in January. Now, I'm interested always in looking at January because that says it was an 8-tick move. So remember, you've got a 3-tick bracket. A couple of ticks of slippage is pretty normal for this report. So there's not a lot of ticks left for profit. If you get an 8-tick move, it should give you 2 ticks or so. It's $31.25 a tick for the 30-year bond futures. So the orders go on the chart 1301.30. That's when we put our orders on the chart. $20, no move. 25 seconds. Usually within 30, there's the move on the YM. It pops, drops, and then changes direction. And unfortunately, it filled us on the wrong side that day. It was a great move, but it was not on the right side. Now, we weren't trading in January. We weren't trading live because performance was rather poor, has been rather poor on this trade, and it still qualifies as rather poor. If you look at the DMM, it's been mostly littered with poor trades. So when you have a DMM that has a stop in June, a dull fill in May, the tariff month was a winner, a stop in March, dull in February, and barely a winner in January, you really have to decide, well, I'm probably willing to trade the YM on this report, but I don't really want to trade my cash account on this event at the moment because it's not behaving well enough. It's just not offering a good enough return for the risk. Now, out of all the bond events, in my opinion, the one that has the best opportunity for the strongest move would be the 30 year, because I think it is, out of all the bonds that we trade and the 10-year note, I think it's the most important. We've got the 20, the 7, and the 10, and I think the 30 is the most important. Okay, so you got to make a decision. Do you want to trade it? Many prop accounts don't allow bond trading. Um, some of them do, but quite a few don't. Bull and Ox doesn't, Apex doesn't, Lilu doesn't, and it's a little bit difficult to get a clear answer why. Something about over more than a year ago, they stopped allowing bond trading. That I'm not going to go into my usual rant. It is what it is. You can't trade bonds in many prop accounts. It's just the way it is. So Bull and Ox, you can't trade them. So you have to decide, do you want to trade it in cash if you have a cash account, or you trade the YM. The YM setup is a good setup. So that's the approach. So looking at January, it was 2 ticks at most was available there. It was not a great profit. So even when it moves 8 ticks, remember 3 tick bracket, couple of ticks of slippage, couple of ticks profit. It was a very quick change in direction also. So it got 2 ticks. And then the nice thing is that it did stay up. The fact that it stayed up gave you a better opportunity than most of the small moves. When it stays up, you get an opportunity to move your stop to safety with the 30 year, and that's, like I said, 31.25 a tick. So it actually was better than what I was thinking, but it was sim. Sim doesn't show your slippage. So there could have been a tick or two of slippage, which would be normal. Looking at June, where I'm sure we traded in our cash account and were pretty aggravated. It was a great move, but it filled us at the worst possible place, the top of the candle, if I remember. Top or bottom of the candle is the worst possible fill in a breakout where you don't have good liquidity. So 1301, 30, the orders go on the charts. And it really went quite a bit further than where we got filled, but it reversed so much that it was a stop out. It was a perfect trade, theoretically, that had a poor fill, so it did not give you a profit. That was the bonds. Look at the bonds on the right. The YM had a nice trade. Bonds on the right. Bonds to the left of me, Joker to the right. Here I am, stuck in the middle with you. It popped right to the top of the bracket and reversed. And that bracket, the move also was right to the high of the day also. Now remember, we talked about our manual reverse breakout setup. That would have worked beautifully. So we'll check our charts. Looking at the YM setup, 1301.30. The YM had a great move. Popped up, hit both targets, and then it pulled back, but it already gave you your profit because it hit both targets. So YM had a nice solid move on that. So two setups that we have, two possible setups. Let me just show you one more. We also had May 8th. May 8th was dull. So let's see what that means. Dull usually means you get a fill and then the price just pretty much stays where it was when it filled you. Maybe moving a tick above, a tick below, two ticks above, two ticks below, but not giving you an opportunity to get your stop to safety or to get much of a profit because it just doesn't follow through. Now the markets are pretty quiet this week. They really have not been very dramatic. So 1301.30 orders go on the chart. YM on the right, bonds on the left. $30, no move at all. Usually there's our move, 36 seconds. Bonds go right to the bracket pretty much and sit. And the price just sits there. And then the YM put you in the market, and then it starts to push a little bit. What you're always looking for, what you want to see is a follow through. When you get filled on a breakout, the follow through is the most important part of the trade if you don't get your targets hit instantly. If it's not a immediate profit, you need follow through. Now you could see that bonds, they chopped around against you. And then the YM missed the follow through target by one tick. One little tick. Now very often it will still eventually hit that target. Did it? There it is. It did. And bonds also eventually did some follow through. So May was not bad. May was not bad, even though it was dull. Now, we're not going to look at April because April was an anomaly. Let's look at it because the fun of April is that years and years ago, this is the way the bond auctions traded on a regular basis. So this is great to look at when you dream of the way it could have been if bond auctions were only the way they used to be. The markets were extremely volatile because of tariff news. It was April when the first announcements were made. $30, no response, and there it is. Took 32 seconds. Big response, big burst to the upside. And you could see the YM had a nice big upside move as well. So that was an anomaly, though, because of tariffs. We don't get those size moves on a normal basis at all. Not at all. All right. So here's what I'm going to do. I'm going to trade the YM in our prop account and bonds. I'm not trading in cash. This report just has not been profitable enough. If it ever really gets back to a place where it's worth trading, we'll know it. So our bond breakout is 1301.30. Our orders go on the chart 1301.30. Oops, we'll fix that. 1301.30. The bracket is 3. Target 1 is 2 ticks. And target 2, I make it 10. If you get that outside move, I want to be able to take advantage of it. If you get a decent move, you should always have an opportunity to get your stop to safety in most cases. So the stop is 5. And I do not use target 1 stop move. I do not move the stop automatically on bond auctions. 1301.30 is our activation time. The bracket is 3. Targets of 2 and 10. The stop is 5. We'll label it breakout ZB. And then we'll set our time to 0 so that we could see how those brackets are going to show up on the chart. If the trade was right now, where would those brackets line up? Now you could really see that bonds are very consolidative. For quite a while, the price has been very tight, in a very tight range. If you go back, very, very tight, very small movement. So we'll put our time back to correct, which is 1301.30. Bracket of 3, targets of 2 and 10. The stop is 5. And that's the bond trade. Like I said, I'm simming the bond trade. I'll trade the YM in our prop accounts. I'll apply it, okay it, enable it by clicking the checkbox. Then we've got our YM trade. Make sure your chart is on YM space 0925. And we set up our YM breakout. Right click the chart. Click on strategies. Double click news trader. Breakout is default. 1301.30. Our orders show up on the chart same time as bonds. Our bracket is 10. That's what we like to do. I would prefer 8 if I could get away with it, but lately the markets have been a little bit tough to do 8 brackets. And then our targets are 10 and 20 today. Target 1 stop move, I'll do a BE minus 4, break even minus 4, and the stop is 20. And then we will also set the time to 0 to see how are the brackets managing. How volatile is this market? Is a 10 bracket going to be manageable if the volatility in the market is similar to what it is right now? That's really the question, right? If you put your brackets on now, the volatility could be completely different in 10 minutes. But we're just trying to get an idea where these brackets are going to land approximately when the trade takes place. So if you leave the brackets on the chart for a little bit, you get a feeling for whether or not it would fill. I hit the adjust button right there because I don't want to get filled while I'm testing. There's a little bit of movement in the YM. The adjust button recenters the brackets. Make sure that you label your YM trade, BRKYM. and that we will trade in our best Bull and Ox account. It's about $400 away from funding. Not giving up on that account. We got zipped by natural gas this morning. We were $200 away. So we're still going for it. We want to get funded on that account. No reason not to try the YM. Double checking our time. Always got to make sure your time is correct. 13:01:30. Bracket is 10. Targets of 10 and 20. Stop is 20 at the moment. That's our setup. Target one stop move is a break even -4. Apply it and OK it. Make sure your chart trader is on the correct account that matches the account your software is set to. And then we will also add a reverse continuation strategy on the YM. We'll add it to the same chart by right-clicking the chart, clicking strategy, clicking 10-minute T news trader, changing the trade type to a reverse continue, and we've got our YM. Just going to do one position, and we'll do a 20 tick with a 20 tick stop. So one position, 20 tick target, 20 tick stop. The minute we start setting up, notice it happened yesterday too. The market got much more volatile as it got closer and closer to the event. The same thing has happened. All of a sudden, we're getting movement now on the YM after it was quite quiet. So one position on the reverse continue, 20 target, 20 stop. Make sure you label it. That's going to be called YM reverse continue. Same account as the YM breakout trade. That will be account 15. And the reverse continue will not be taken until the breakout either fills, finishes, stops, or doesn't fill. Okay? But it's always good to have an option for an after the news entry. Maybe you know for a fact you get filled on the wrong side, you get stopped out, and boom, you want to get right back in on the other side. Having a reverse continuation setup allows you to do that. So 5 minutes. In theory, the data for the auction comes out, not the result, but the information comes out at 1 o'clock. Then 90 seconds later, that's how long it takes for the market to actually respond and for the news to actually be released. It's strange the way the bond auctions work, but we've studied them. You know, we don't want to put our orders on at 1 o'clock because that's way too soon. You don't want to leave yourself open to just a random fill that has nothing to do with the auction. So we've studied these auctions for years. We know that the response we're looking for is going to take place almost always after 101.30. That's like almost always. So we looked at the videos. We looked at last month. We looked at 4 videos. That's what I've got. So we'll keep an eye on the YM. Thinking about our bracket. Is our bracket safe? Prefer 8 on bracket size, but the markets have been a little bit volatile, thus requiring a slightly bigger bracket. The YM usually has a decent enough move that you're not leaving too much profit inside the bracket. Usually there's enough of a move to overcome the bracket and still give you good profit. Now, you wouldn't want to have a 20 bracket, right? People think to themselves, well, if a 10 bracket's not quite safe enough, I should make the bracket a 20 bracket. And then I'll be safe because I'll only get filled in the correct direction. But what if you only have an 18 tick move initially and then it hangs out at the price where you got filled or it didn't? You don't get filled if you have a 20 bracket and an 18 tick move, and all your profit is inside the bracket. So finding the right size brackets is sort of an art. You've got to go back and you have to look at the various events, calculate the amount of burst each month, come up with an average, make sure that your average makes sense and that it's an actual number that a bracket can still give you a profit in relation to the size of the bracket. So there is a skill. Brackets are not just random numbers that we just go, okay, let's make this an 8 bracket. I think 8 would be good. No, you gotta test. You don't have to test, you gotta look at the event. If you are the kind of person that likes to test, then your setups can be even more exacting. And you're also able to design your own trades because you could look at, we don't know every single instrument on every single report. There's always extra instruments that might be moving on a report that we haven't looked at. For instance, there are some traders that like trading the YM more than we do, the RTY. Particularly thinking about next week, because next week we have CPI and PPI. Those reports move on almost any instrument. Then, you're looking at the way an event moves to determine what your setup should be. Should it be a breakout? Should it be a trap trade? Should it be a reversal? And the way that you come up with that is by intelligently analyzing the way the event behaves on an extended period of time. Depending on market behavior, depending on news of the day, depending on what's going on in the world. Years ago, our rule used to be 6 reports were required to come up with a setup. That changed. I think when I got here, I thought that 6 was too long. And they didn't, when I first got here, I was not trusted. They didn't know me from Adam. I was just a member that got hired to work here. So I was not allowed to change anything. I got all sorts of grief if I even changed a bracket by 2 ticks. I was not allowed to do that. But as the years went on, I became trusted until that fateful day on that FOMC statement. And one day I'll tell that story. But trust always can be reinstated. 1301, we have 40 seconds. Our orders are going to go on the chart. I'm not going to do anything with bonds. That'll just let it trade by itself because there's no risk there. It's a sim trade. But my YM trade, I'm going to manage that trade. First thing that's going to happen is our brackets will show up on the chart. I'm going to try not to press the adjust button. I don't want to press it at all if I don't have to. But if we get movement, right now we're 2 ticks. I pressed adjust just then because we were already 3 ticks I'm pressing it again. Now, I think that I don't know if that was the move of the news. It was about 4 ticks. I don't think so. I don't think so because we're not seeing any follow through on any instrument. Now, I would let the chips, it's out. The auction is out. The news is out. We don't have much of a response. But unfortunately, I'm filled. Fortunately or unfortunately, I'm filled on the YM. And it looks like I'm filled on the wrong side for the second time in a row. Filled on the wrong side on these bond reports because of pre-trade volatility. Pre-trade volatility. That's the problem. That's the problem. Turning off the breakout. Now, bonds have not had much of a move at all. YM looks to me to be a short. That short is the right direction. I'm going to take a short, and if I'm wrong, I'm going to jump off a bridge. I don't think I've made too many good decisions this week. In all seriousness, this has been a week of really difficult decisions. But it failed to the upside, so we should get a little bit of a push to the downside. Now, I would not want to stay in this trade very long because there's just too much of a trend to the upside today. I may not want to stay in this trade at all, to be honest. Now, bonds, you can see they just didn't even really move on the report. There's just no response. No response. The YM burst up, filled me, and then sold off hard. It sold off hard, and I'm going to exit this trade. So I'm exiting this trade. I've had enough of the bond reports for this week. They're not behaving in a tradable manner, in my opinion. And I'm going to let it go at that. They're just not offering good opportunity. Anybody have any questions? Thanks everybody for watching on YouTube. Sometimes, you see the good, the bad, and the lousy. And today was the lousy. This report not behaving well for us. And thanks for watching on YouTube. We'll see you tomorrow for the WASD report. Love to have an awesome WASD to finish out the week. So hit your like button,